GM. I think we got this set up right? We rolling good here?
Oh, yeah.
All right, looks good. How you doing this morning, Jules?
Doing good.
Glad
Feel
to
a lot
hear
more, since I'm always the earliest time zone here, I actually feel a lot more awake this morning than previous ones.
Did you get up and go to the gym or something this morning? What happened?
No, I don't know. I go to bed early anyway. Just for some reason this morning, I'm just.
You got a little bit stronger coffee in the grocery store. That's awesome. But welcome back, guys. I'm SMS. This is Jules, and this is Solana Made Simple with HawkFi. We've got Brad behind the stage here today. We're going to be talking a little bit about what they got going on, giving you a little bit of an explainer of what exactly HawkFi is, and talking about liquidity automation, something I'm going to be learning a lot more about as well. So make sure you guys bring your questions. If you have any comments, I think we got Gravy behind the scenes helping out with some of the socials there. So feel free to ask any questions. We'll try to relay them over, and I'll be checking the chat as well. But like I said, we're going to be breaking down what they're building, why it matters, and giving you some fresh liquidity alpha along the way. But if you got any news, any topics that you want to tap into, Jules, I know we usually start off with that. Feel free to take it away. It's all yours.
Always. Yeah. So we're going to, I feel like we're getting to the point where I might not feel like I'm keeping up with all this news. There's so much treasury DAT type news constantly that it's almost impossible to keep up with it at this point.
Sure. Can you explain real quick in like one sentence what DAT is to you? Because I've been looking this up and it's kind of like a topic I want to dig into a little bit more. But
it's digital asset treasury. So like essentially you're just basically saying, okay, if we're going to be we're fully a treasury company, and that's mostly what they are, or we are partially one, it's basically like saying our goal is to, in some form, stockpile digital assets. Now, obviously, as we've talked about in previous shows, we're seeing as we go, a plethora of different types of that. You know, we started with obviously just BTC exposure and things like that,
right,
or spot exposure. But now we've got obviously Solana DATs and things like that. So they're going to vary quite a lot on that. But essentially, yes, digital asset treasury.
Yeah, I'd like to get in that conversation because they are comparable to ETFs, but they are different. There's a level of like the SEC securities and stuff like that comes into play with digital asset treasuries versus the ETFs, from what I'm understanding. So it's definitely
a good topic to talk about, because ETFs would be strongly different, really, because then we're talking about like, you know, you have a company that's handling, basically giving you exposure to. You know, I mean, they're the ones kind of creating the exposure in a sense to these things, while these treasury companies are taking it upon themselves.
Yep, that's exactly it. And I think that's a super interesting point, because it's both sides of the coin, and when it comes to TradFi and that bridge over there. So something I definitely like to tap into. But anything else you got cooked up for us today?
Yeah, I do got the news bits here. I can run through them pretty bullet point style here. Galaxy Digital is going to launch an SEC registered tokenized GLXY shares on Solana. So
nice.
The important part there is that's the first NASDAQ listed firm to be tokenized on a major public blockchain. And
so that's going to be like X stocks, like the Solflare, so on and so forth, like a tokenized equity.
Yeah, I mean, I would assume they would be on there. I think that's more for pre-stocks, but
well, no, if you go to Solflare, you can buy actual stocks right now.
Oh, I thought you meant that one.
No, not the pre-IPO.
Yeah. That's what I thought you were referring to. But this will allow stockholders to tokenize and hold Galaxy shares, basically, but on chain, and it's available to approved KYC investors.
Interesting.
So, I mean, that's the big thing, is you are going to obviously have to KYC. But also, we've got crypto venture capital company Sora Ventures announced a $1 billion Bitcoin treasury fund. Says it plans to acquire the full amount within 6 months. And this was announced on...
Are they performing some bank heist? Like, what's going on?
Sorry, what was that?
I said, do they have any bank heist planned or something? What's going on there?
Yeah, I don't. Well, it was announced at Taipei Blockchain Week. Jason Fang unveiled what he called Asia's first $1 billion Bitcoin treasury fund.
I did see that headline.
It was the discussion was basically titled "Introducing BTC Strategy into Major Asia Equity Markets." But basically, the fund is backed by a $200 million capital commitment from institutional partners across that region. In an article shared by Fang, the company said aims to accelerate Bitcoin adoption among corporate treasuries. So again, from different sides of the globe here, we're just accelerating the whole process we've been talking about. And one other final thing, along the same topic, NASDAQ's filing with SEC proposal to amend rules to enable trading of securities listed on NASDAQ in traditional digital or tokenized forms. So we're, again, heading down the path here of, and when you think of RWAs especially, it means to literally, basically, let's tokenize everything.
I was going to say tokenize everything. It sounds like the underlying sentiment.
Yeah, exactly.
We've gone from crypto curious to interest to a little bit of dabbling to full-on participation, and it's not just adoption. We're past the point of that. Like I've said this time and time again, what we talk about, the news, the ideas, the takes, the speculation, everything that goes on, like that will ultimately become the curriculum for the future, how this stuff starts to like develop and plan out. I mean, I still think we are ahead of the ball when it comes to that point, but there will be a point where it's like people just need to go somewhere and learn how to start a wallet, the safety, security, like measures, the same way a bank, you have to sign these forms and stuff like that for regulation, but they also explain to you how your online checking account works. Like, I think that's kind of where we're headed, where the adoption part goes into play. It's basically just, this is the new website, click this button, and people are like, okay, sounds great to me. You know what I mean? But it'll be tokenized.
We are past adoption, but these are still the first steps of basically saying we're going to be
foundation.
We know what the stablecoin push and things like that obviously it's a done deal at this point. They're heading in this direction. The only funny thing would be that whole topic that came up yesterday or maybe it was end of last week with I think it was Russia kind of accusing our administration of essentially going to be using tokenized assets in the stablecoin push to like find a way to start tokenizing everything like our debt, so that to eliminate the debt and unwind it that way. I don't know on that. That's probably above.
I mean, to me, it sounds like that was almost like part of what some people thought was like the idea of how we are going to eliminate the debt is from crypto somehow. I don't know. I never really even like looked down there. I just kind of figure if you have crypto, you have people cashing that out to spend it. The fact that we're going to stablecoin, essentially, it doesn't leave crypto, but it also starts to look at, all right, well, this is going to be used in the same respect as the dollar and fiat. So like it does kind of like carry over. And that's the way I look at it, because when you spend crypto, there's income tax on your expenses out of that. So it's literally like you're watching this develop in real time. But I don't know. I think stable coins, when it comes to onboarding, I explain to people, here's step one. If you got $1,000, like make sure you keep 300 in stables in USDC just to have that on the side. You can do in your investments with other things, but make sure you have stables. That is a very key point. I point out, Circle IPO, people are asking what to invest in for the future. I said, well, what's going to really be around the market? A stable coin mint, it's always going to be there. You're going to have Circle involved. That's some respect of crypto. It wouldn't be a bad investment just to kind of get a conditional play. You know what I mean? Like it's pretty obvious that they'll be building. You look at AI, you look at like what's a respective project or company that's in there. But either way, we know which way it's going. It's cool to keep seeing like the other areas of the globe kind of come into this, because I think you take a worldview of this whole crypto thing and it gives you a better picture of where we're headed. But if you got anything else for us right now, or do you think it's a good time we bring up Hawkeye, start digging into this liquidity and everything we got?
Yeah, let's bring Brad in.
All right, let's go ahead and do that. Give me 1 second here. Boom, boom. All right, boom. Should have Brad here. What's going on, Brad? Welcome to Solana Made Simple. I don't know if you're on mute or not, or if you.
Sorry, yes, I was. Hi, happy to be here.
So,
and we're gonna dive into this.
Oh, sorry.
No, you're good.
Something there, but I was say you're in Asia. Is that correct, Brad?
Yes, hopping around as we all are with remote teams, but currently in Asia.
I don't know if you're going to go with that, Jules, or not.
Oh, sorry. No, I was just trying to fill the blank there while we were waiting.
Okay. Well, anyway, guys. So we've got Hawkeye in the building today. We're going to be talking a little bit about that, and we've had Brad behind this wonderful PFP. I like it down there. It gives a nice touch to this. So I appreciate you being here. Appreciate you making the time zones work. I know it is kind of crazy, but that's the world we live in here with Web3. But if you want to introduce yourself, tell us a little bit about your background, anything you'd like to share, and then your relation to Hawkeye, and we'll dive into what the project and company actually does. Because like we were talking about behind stage earlier, it's vastly different from when I first got introduced to you guys about 1.5 years, 2 years ago.
Yeah, definitely. Great time to reintroduce Hawkeye. The product has evolved a lot over the years, and in fact, now is the best time to share our most recent updates when there's a lot of new token narratives and token metas popping up. As you guys mentioned, there's RWA, there's ICM, there's, don't know whether meme coins are going to come back in the same shape and form as before. But there's a lot more price action and volatility happening, which makes it very exciting for liquidity providing. So I'm Brad, one of the co-founders of Hawkeye. And we are an LP terminal, so a liquidity providing terminal, aka kind of like an axiom for liquidity providing. So our end users are liquidity providers who LP directly into the dexes like Meteora, Orca, and Radium, and we provide them with smart analytics to LP better, and also fast and degen automations as well. To automate their LP strategies, which historically have been very manual, very slow, generating very diluted fees with wide range LPing. But now with Hawkeye, especially our latest innovation in HFL, high frequency liquidity. Sorry, I'm trying to share screen over here. Do you think it's a good time for me?
Yeah, you're more than welcome. Anything you got the full range of everything here. If you hit the share screen, I'll bring it right on up here so you can explain it, and then we'll just be right below, like this.
Right.
I don't like that one. This one's better right here.
Mirroring.
There we go.
Made me look like me and Jules are in the same room for a second there, looking at them. That should be definitely you there, correct? Yeah.
Yep.
All right.
This will be a little trick just because people will be watching their phone. If you zoom into your screen just a little bit, it'll make the post almost like, there you go. Perfect.
Yep.
Now it looks like an app on anybody's phone.
Yeah. So
yep.
Yeah, so zooming out a bit, maybe just to set the table over here. Wanted to share a bit about Hawkeye. Wanted to share a bit about our latest innovation with high frequency liquidity. Drop some LP alpha as well, and I think it's best to just dive straight into it with this visualization over here to talk about how liquidity providing has evolved over the years and how Hawkeye has evolved over the years as well. So historically, liquidity providing is about providing liquidity with whatever tokens you have, whether it be Solana, USDC, meme coins, altcoins, governance tokens, whatever, to earn some yield. And historically, those yields have been pretty low. APY wise or daily yield wise, because you're LPing in a very wide range and in a very passive way. But then with Hawkeye, with the analytics and the automations that we provide, you can liquidity provide in a very concentrated and active fashion. So as you could see over here in this diagram, you could provide liquidity in a very narrow range, in a very concentrated way, which means you generate a lot more fees for every dollar you put in. But that comes with a trade-off of impermanent loss. But then if we provide real-time rebalances, whereby Hawkeye does it with 0-minute rebalances, we could constantly, or the users could constantly be in range to produce fees. And that makes liquidity providing a lot more exciting, especially now that, there's a lot of volatility, extreme price action, there's surging volume on Solana as well. This is another very good avenue to earn decent or pretty good yield on your tokens and on your assets as well.
All right. So,
So
I wasn't sure if you're going to keep going with that.
sorry,
I was going to ask a couple questions up to this point, but if you have more to add, keep going. I'm taking notes. I'm in school right now. Taking all the alpha.
Oh, no worries. I think that's mainly what I wanted to show, and I'm sure not everybody will be watching the entire. Will be able to watch the entire stream. So I wanted to show you guys the dApp, which is here, hawkfi.ag. And then if you go down here on the bottom right, you could go straight to the docs, and these are all the guidelines of how to basically capitalize on all the different liquidity providing strategies and automations you could do with HawkFi. So don't worry, we'll be demoing all this today here on the stream. But just in case you miss anything or forget anything, there are tutorial videos in the documentations, and there are guidelines and basically step-by-step on how you could enjoy this whole high-frequency liquidity thing.
Awesome.
I have something to add real quick, if you don't mind. Something to add, and maybe even a question there while we have the HawkFi dApp pulled up for anyone who did not hear him mention. So this is essentially a liquidity terminal. Okay, so as you can see right there on the screen now, you can see Meteora, Orca, Radium. So this is a terminal, essentially, just like you have a trading terminal.
Okay.
That brings everything together. So
is it safe to call it like an aggregator in that respect?
I guess, yeah,
that's correct.
So my point here, to me anyway, and I don't think any of the cooperating companies would disagree with this, but the point to me would be, why not use HawkFi rather than going to some of these individually? Because you're still, if I understand, at least this is the way I've talked about it always, so I hope I was right. You're still like, because it's a terminal, you're still actually utilizing Meteora, Orca, Radium, whatever you want to use. And like, for example, you see it on the screen, Meteora obviously has MET points, things like that. So if you use HawkFi, you're still getting your MET points if you're using the Meteora aspect.
Yep.
And I don't mean to maybe throw this out too fast here, but you can also see they have HF, is that HFI points or? Yeah, HFI points. So, I mean, you can, I posted about this a long time ago on why would you not use HawkFi, which is a terminal, to bring all together instead of 3 different dApps. Right. And if you're using the Meteora pools, you're sitting here gaining points on top of that from Meteora and HawkFi.
That's exactly how I was talking to Brad earlier. I had an airdrop I didn't even really realize was there until I checked my Jupiter wallet, where it does like, you're waiting to pick this up, and I had a HawkFi airdrop from previously from doing exactly that. I was supplying liquidity for some of the coins that I saw on there because the APYs were so high. I was like, oh, this is great. Like, nobody knew about their platform because they were so new back in the day, and that's why they had these tremendously high APYs. And I was like, all right, well, let me take advantage of this. But just a quick recap, guys. And I'm glad you said liquidity terminal, because that's what I wrote down here. I was like, oh, I like the sound of that. It gives you smart analytics, so you can get the edge, it sounds like, to liquidity and liquidity pools. Is that correct? To kind of like, phrase it that way?
Yes, correct.
So when you do the liquidity, for people that don't know how this works, you are, typically you're expecting some kind of yield, and typically you wouldn't get the most unless you knew what you were doing, exactly how to get in and out. And HawkFi kind of keeps that a little bit more simple, concentrates this, so there's more fees per dollar putting in there. But the issue is, if you don't know what you're doing, that runs into impermanent loss. So what I believe you said, you had something that produces a price balancing mechanism. Do you want to talk a little bit more about how that works for the people that are kind of a little bit more new to liquidity pools, and how impermanent loss kind of takes effect?
Yeah, definitely. So maybe I'll just leave this graphic here again while I explain liquidity providing. So let's say there is Sol USDC pool where people swap from Sol to USDC or USDC to Sol. And you're basically providing your Sol and USDC into the pool for people to do the swapping, and you earn a fee from it for providing the tokens or your liquidity in it. But sometimes when the pools are imbalanced or the price goes one way or the other, the your pool of assets become imbalanced too. Let's say you put in 50 Sol and end up with having more USDC than Sol, or the other way around, having more Sol than USDC. So what happens if suddenly, you it gets imbalanced and you have 100% USDC? Yes, you generated fees. You end up with more, uh, like more value than you deposited. But then Sol moons 50%. But then
Yeah.
you're left with USDC and no more Sol. And so that's what we call impermanent loss. It's like, yes, you generated fees. Yes, you earn more than you deposited, or you manage to withdraw more than you deposited, but you could have earned a lot more by just holding Sol.
Yep.
So that's kind of the complicated part about liquidity providing, and frankly, it's what a lot of people don't like about liquidity providing as well. It's like, yes, I get the fees, but my upside is somewhat capped. And
is that something that
no
you think like a solution that Hawkfly kind of has found or has provided?
Yes. So this is where, if you look at the visualization over here at the very bottom where it shows high frequency liquidity, this is what we say, like, there will always be impermanent loss, but the goal is to outprint impermanent loss. So let's say historically, when you're providing Sol and USDC in a very wide range and traditional AMMs or even concentrated liquidity or dynamic, well, CLMM or DLMM, maybe let's say you're earning 1% per day. But then what if you concentrate it even further and you're earning 5% a day instead of 1% a day? That's 5 times more. So that's the idea. Like, although there is impermanent loss, you're profiting more than the impermanent loss. You're printing more despite having impermanent loss. And so that's kind of like the new innovation over here that Hawkfly slaps on top of these dexes, Meteora, Orca, and Radium.
Now, I would say, can you also maybe explain how like real-time rebalances work for any beginners out there?
Yeah, definitely. Actually, wanted to mention as well that LPing or providing liquidity in a very narrow range is not new. Anybody could do that directly on the decentralized exchanges, on Meteora or let's say Orca, and concentrate yield. But it's just not physically realistic to expect them to rebalance it every say 30 seconds or every 1 minute for the entire day. And that's where Hawkfly comes in. At the end of the day, we are an analytics and automation platform, and we have scaled our automation platform to be able to do this at scale for thousands of users, for thousands of transactions every second or every minute, and basically real-time rebalance for them. So kind of like, let's say today, if Sol is at, I don't see the price here, but let's say if Sol is at $215, why would you provide liquidity for Sol at a range of 150 to 300? It's not gonna dump to 150 in an hour or pump to 300 in an hour. Maybe within the hour it will only fluctuate between 210 to 220, maybe. And that's where you want to concentrate your liquidity, in that range, so it's super capital efficient, which aka means generates more fees for you as well.
I think that was a pretty good explanation there for beginners, so that they understand like why you don't need to have these wide ranges. You know what I mean?
Yeah, I'm about to gatekeep this for this like educational process going on here. This is like some free alpha for anybody paying
I know
attention.
it's very mind bending.
No,
It's not very straightforward for first time DeFi users, but
your first time. Well,
it speaks to me.
Yeah.
It speaks to me as a
Right.
trader, because SMS has heard me say before that I always talk about, even just from a trading standpoint, that technically 80% of the time you're in balance instead of being out of balance, which means you're trading in a range. So you want to trade ranges. So LP is the same way. You don't want to trade some. I mean, well, you could trade some wide range. In LP, you don't want to trade a wide range. But long story short is you're trading ranges. Obviously, if you now have a form to help with some automation and tighten things up, I mean, that's where you're going to be printing all the fees. So yeah.
So one of the biggest things that I ran into was like I wanted to learn liquidity pools just because I think that the market was in a point where it was just starting to enter a bull market, and that's where people were starting to understand that, hey, you can supply in a range. I think Meteora had just come out right around that time too. So it was like single side liquidity providing and stuff like that. Like I just had to get myself into it to start really learning like what this means, how it works. I never really saw too much like value in it just because I didn't want to spend that much time rebalancing and finding the best strategies and stuff like that. When I came across HawkFi and I realized what you guys had set up before, I was like, oh, this is great. This is something I want to get into. But I'd lost interest just because it was like it wasn't one of my like sought after things. But listening to this now, hearing the breakdown, for me not being a very first time, it makes so much more sense to me now. Like I can see like, the big picture now, but for somebody coming into this, I think that the way you broke this down, it's a starting point and it gives people the resources. Like you said, the documents, if you guys that weren't here earlier or weren't paying attention, there are documents with videos, tutorials that HawkFi has and they offer in the cookbook. So make sure you guys are taking a look at that. This is the alpha. I tell everybody this, when I find a new project, I find something I like, or if it's something I just have no idea, I keep index cards on me. I take notes and I go in there and I read through the documents like it's like, my gold. Like I'm going to get the alpha from there because you start to find stuff that, isn't always on the timeline. And it's the juice that you really want from the squeeze of, crypto, of finance, and of this. Like this is put together for you to read. If you didn't, click on a couple buttons, you wouldn't know that there's an LP cookbook behind the screens here. So I appreciate you sharing that, and I'm excited to kind of learn a little bit more. I just kind of wanted to touch on those basic points there because for me, getting into it, I had no idea what I was doing. This makes a lot more sense to me now. It's something that I think people can play back and get a good understanding and a feel for where they're at. But you're cooking, man. It's all yours.
Yeah. I think we've reached a critical scale of expected returns for users to make it attractive enough. Like I said, in the past, it's like, okay, if you come to HawkFi, you could earn, 0.5% a day on Fartcoin. Nobody's excited about, 0.5% a day. But if I tell you it's 5% a day, and 5% a day, if you maintain it consistently, is 1,000 plus APY per year, that's attractive. And yes, there's a lot of friction and mental loops to hop over to learn how this works and actually familiarize yourself with it. But with that kind of expected return, it becomes worth it, and it becomes attractive for users. And so maybe before I dive into the demo, I used to always like to drop the alpha at the end, but I realized like it's much better to drop it in the beginning. So just a few points of alpha over here for LPing and points and whatnot. So one interesting thing is weekends, people log out and touch grass on weekends, but actually weekends are often the best times to LP because Trump is not making some big announcement. Jay Powell is not making some big announcement. There's no news catalyst. Prices are are relatively stable in the weekend. So that is the best time to provide liquidity in narrow or concentrated ranges in the weekend for whether it be major pools like Sol or even the altcoins. But yeah, so weekend LPing as alpha. And the other thing about like tight range, high frequency LPing is that one of the top questions we get is, oh, okay, so how tight should it be? How do I optimize between expected returns versus impermanent loss? You could look at the chart yourself or even ask ChatGPT, like, okay, what is the average volatility of Sol in the past 30 days? And ChatGPT will say, oh, Sol has fluctuated or has been swinging 3% per day for the last 30 days. Then set the range at 3%, maybe like plus 1.5, minus 1.5%, instead of setting a 20% range. I don't think Sol's gonna, well, I hope Sol doesn't dump 20%.
Yes, a lot of volatility.
Yeah. So adjust the tightness according to your expected volatility and direction of the price. And lastly, I guess what a lot of people care about here is points. Yes, if you automate liquidity providing or DLMM, Meteora DLMM through HawkFi, you double stack points. Meteora, as we all know, is going to TGE. HawkFi will TGE as well, though I will be upfront. We don't have a specific timeline yet because we want to get to a certain scale and momentum before we do a TGE, but it will happen. So you can double stack points, HawkFi points and Meteora points as well. But the nuance here and the interesting point here is that Meteora season 1 is over. There will be a season 2, and it will be very fees focused. It's not like the points are based on fees generated, not TVL. And guess what? HawkFi's high frequency liquidity specializes in turbocharging fees. And so that's an easy way to turbocharge fees while turbocharging points generation for Meteora as well.
That's bullish. I like that take right there. I got that written down. Make sure you guys are taking notes. That's the alpha right there. Weekend's good to provide liquidity and narrow margins. And if you're trying to earn double points with Meteora and HawkFi for future TGE and current TGE with Meteora, it's right around the corner. So might as well take advantage of it.
Yep, sounds good. Yeah, let's dive straight into the demo.
Sounds good.
This is by no means prescriptive. We're here to show you guys the tools and show you guys how to, do your own fishing. We're not here to hand you the fish and, just copy paste and whatnot, because there are many ways to personalize it based on your expectations of the token price action, volume, and your risk return profile and whatnot. But let me show you this example. Let's say, I've been doing demos on Sol USDC. Let's try something that's more degen or left curve over here, something like Fartcoin. So here the PNL chart shows that if I had held Fartcoin, I would have earned 2%, whereas because I LP'd with this automated strategy, I earned 10% instead. So that's a goal. You want to generate fees and outperform hodling the token itself. And these are the configurations. And I will show you how to, again, you don't have to copy paste this and follow it verbatim, but it's just a template. You could tweak it yourself. Okay. And again, in the docs, there's this whole cheat sheet to show you like, oh, if the token is volatile or not volatile, or if the volume is high versus low, what kind of template can you start with? Anyway, let's just dive straight into it. Oh, I don't think I have Fartcoin in my wallet, so I could just do a regular Sol USDC for now. And this is the aggregator value prop as well. When you search Sol USDC, you could see which pool from which DEX has the highest yield. So for example, Sol USDC on Orca is generating 8 bibs, 0.08% per day. On Radium is the same. And then on Meteora is much higher. It's 13 or 14 bibs over here. So let's go for Meteora. I don't usually overthink it. I just look for the pool with the highest yield.
That's what I've done. I go for the big juicy one, and it's like, So all right, let me ask you this: how, I think this is probably a quick answer for you. When liquidity APY goes down, how does that work? Is it, I know it's more people are getting involved, but how does that price change, like fluctuate with more people getting involved with liquidity?
Yeah, definitely. So it gets diluted if more people deposit into the same
Mhm.
pool. Then if the volume is the same and more people put more liquidity in there, you're basically sharing the same pool of
Gotcha.
fees, right? So your yield gets diluted.
Perfect.
That's yeah. But on the other hand, if volume picks up, if volume goes up, then your yield goes up. So that's the thing that's hard to predict. Is like, yeah, more people can deposit, but what if volume pumps? Then you know.
I'd also
But
argue that in a lot of cases, not necessarily just the volume, but the more people into it, where I'm going with this is like, so a more established, let's say coin, whatever, you're going to have less volatility. So, for example,
Mhm.
there's going to be more volatility. Let's say you're picking some new random meme coin or something like that you're going to LP with. I mean, your swings are going to be much
Mhm.
more higher than obviously something like Sol,
Yeah, definitely. Yeah. Actually, Sol USDC is boring. Let's just try. Sorry, why is my keyboard weird? Let's try like.
I appreciate you doing this demo, by the way. It's definitely fun and educational for people to watch that have not. And I think that that's one of the biggest hurdles that people have is they're just like not sure what to press and how it actually is to look at live. Like when you have a curated demo or something, it's easy to watch, but then you get to it, you're like, you know what? I don't know. I don't have. You got questions. You can literally see right here, like guys, it's not that hard, but just take your time, go through it, and look what's available. Look
Yeah.
for the simple big number, and then start there.
Yeah, no worries. My pleasure. Sorry, I want to make sure you guys get the most out of this. So let's demo Fartcoin, but while we were at USDC a while ago, sorry, Sol USDC a while ago, because this is my full-time job and I look at this every day, I roughly know when the yield is high and when the yield is low. So for example, these Sol USDC yields are considered low, like 0.14, 0.13. 1 to 2 days ago, it was up to 0.5, I think. So you'll be earning at least 3 times more. And usually this is a good indication of momentum is that, okay, so less people, there's less volume or less swapping going on in the Sol USDC pools. And the keyword here is momentum, is that it's trending, but you don't know whether it's trending upwards or downwards, because it could be a lot of people selling or a lot of people
Right.
buying. And that's where you need to actually look at the price
So
action.
let me
As
jump
well.
in on this real quick. I got a question. So like, let's say I'm trading perps and I'm typically I'm one of the bull, case scenarios. I just look for my entries for, price to go up and I'll leverage it and go long.
Mhm.
Would this be, if I'm good
Mhm.
at finding that, looking for the momentum, paying attention to the RSI and the MACD, would this be a situation where, hey, maybe I want to go check out some liquidity pools if I see the momentum and I'm betting it's going to go up? Wouldn't that be a good point to start looking at concentrated liquidity pools to potentially use that as a play or a condition, like, alternative play?
Yeah, yeah. That's true. Actually, it's kind of like what you looking at Deck Screener or Bird Eye.
Uh
It's
huh.
like you're not spending half an hour looking at it, right? You're not diving so deep into the numbers. You're just looking at the screener for maybe
Some
2 minutes
patterns and
just to
stuff like that.
get a rough feel of like, yeah, like what's
Right.
trending kind of
Perfect.
thing. So that's a little bit about the alpha here in HawkFi. So because this is an aggregator, it aggregates all the dexes, all the pools. This is already sorted in real time based on trending
Nice.
pools. So for example, cards is trending, Sol USDC is
Shout out to
trending.
Cards,
I
by
don't
the
know
way.
what these other. Oh yeah,
They
cards
got a
is
really cool,
really
yeah. What they
cool.
got going is really cool. We had them on Marinate Finance Space the other day, and very interesting stuff.
Mhm.
So very very cool company over there. Shout out to them.
Yeah. So whatever's on the HawkFi first, this is basically like a deck screener for
Hmm.
LPing over here. And what I've been very impatient to push out is right now it shows 7-day or 24-hour trending pools. We want to do intraday to show you like, oh, what's been trending volume and fees wise in the past 4 hours or 30 minutes, because That's very relevant for these very active degen LPers who LP for a few hours instead of a few days, kind of thing. Yeah.
I mean, the thing about that,
Yeah.
I've
So
seen some people where like a coin will launch, they'll run straight over to the DLNM pools and get that set up, and they're making a.
Oh, we lost him somewhere there.
oh yeah,
Not sure what
he
happened.
lost his audio.
Anyway, yeah, I believe you were probably heading towards the demo there.
Yeah, no worries. I think I could finish his sentence for him, kind of. Basically, new token launch, crazy volume, crazy volatility. Throw your bags into DLMM, and then you print a lot of fees. There's one section in the cheat sheet that talks about that too. So when you have big new launches, very high volume, very high volatility, what are the what's the template LP strategy for that? In fact, sorry, another digression here, but I think it's worth showing is, sorry, I'm too zoomed in, it's hard to. Is to show you how high frequency liquidity is very exciting for new launches. I think it was when Kanye launched his Yeezy token.
Oh, sure.
Let me look for it. There you go, here you go. So threw in 20,000 and printed 18,000 in a few hours, if I recall correctly. And I wasn't even early in this, and this wasn't optimized either. Like half the time it was out of range. But this just goes to show like how if you do very active, very tight, and very fast rebalancing DLMM, kind of like a quant or market maker kind of thing, and that's why we call it like high frequency liquidity strategies. The risk return profile is very attractive. Obviously, you wouldn't be printing these numbers every day, but whenever there's a big launch, like, you know, I think Switchboard is launching today, and then there's going to be hopefully the Meteora TGE really soon. Those are the Super Bowls. That's the best time to you know.
Obviously, yeah, you want high volume, obviously.
Yeah, it's like the volume is so high that you don't care about the impermanent loss because you're printing so much and you're out printing impermanent loss anyway. Yeah, anyway, sorry, we kept digressing. Let's go back to the demo. Fartcoin over here. Ooh, the yields are pretty low. I think it was like 0.20 yesterday. Let me see. But again, that's the benefit of concentrate. Oh, sorry. Well, that means it's pretty fast moving right now. Anyway, so this is 0.3. This is decent. And especially when you concentrate it. So imagine like if the range is 10 times tighter, you're maybe earning 10 times more than this, which is 3% a day. Just rough math. Anyway, so you create a position here. You could pick the liquidity shape. I honestly don't care that much about the liquidity shape. I know a lot of Meteora DLMMers do. And the reason I don't is because we are talking about high frequency liquidity here, where it's super tight and the shape doesn't matter as much.
Okay.
And you'll see why. So, sorry, what bin step is this? So let's say 2 bins, 40 bits. Yeah, just for the sake of the demo, let's do minus 40 bips plus 40 bips, or okay, maybe a bit more since it's pretty volatile and high volume lately. So I could do single-sided, or I could pair it with, you know, do double-sided as well. And then I just create the position. Once I create the position, then I could set the automations. So as you can see over here, we're on the Fartcoin pool page. I should be able to set the automations over here. sorry, my internet. Oh, sorry, I refreshed. My internet's pretty slow today. So here you go. You scroll down here you see the automations. By default, auto compound is on, but you could configure it here. And these are all the automations on HawkFi. If they're confusing to you, you could also go back to the HawkFi docs where it explains the different automations we have. But let me just dive straight into what I usually like. I prefer auto claim to sol instead of auto compounding. Basically, the fees you generate, instead of redepositing it into the pool, I claim them and convert them to sol. The reason for that is high frequency liquidity is already pretty degen and very fast printing. And I'm happy to lock in profits in sol instead of, let's say, a random shitcoin that could go to zero, which hopefully it's not the case for a fartcoin. And this is where it's all, take profit, stop loss, pretty straightforward. Set a take profit at, say, I don't know, do you want to close a position when it's up 50% or 100%, or maybe you're so bullish you don't want to take profit at all, or you want to set a stop loss for similar reasons because you don't think it's going to go to zero. Right. Up to you, right? Oops. And then auto rebalance. This is where a lot of the alpha is at. So I like to do swapless, no swap rebalance. So this is very unique to Meteora DLMM. So it's a lot more customizable compared to like CLMM on Orca on Radium, and that's one of the many reasons why a lot of active liquidity providers love DLMM. You could customize the liquidity shape, and there's this thing called no swap rebalances. Basically, you rebalance a position without swapping, which means you incur less fee. Yeah, because you're not paying gas fees to swap the asset to go back in range. How it works is you literally withdraw from the bins, the out of range bins, and redeposit in the bins where the price moved to. So I like to do swapless. And then rebalance mode. Do you want to rebalance up and down? Sorry, I'm too zoomed in here. Do you want to rebalance up and down, or do you want to rebalance up only? I'll save this discussion for later, but let's just assume it's up and down. And then instead of hourly rebalance, we could do it every 1 minute, or even just set it to 0 minutes, which is basically like.
I was gonna say that means it's just gonna like be literally just running
here,
the whole time as soon as you hit go.
Yeah, so it will rebalance whenever the position is out of range. If it is in range, it will just
whatever range you set previously.
The nuance.
That's what I'm saying.
Yeah, but the nuance over here is that the series of transactions needed for a rebalance takes 30 to 60 seconds. So yes, it triggers in real time, but something you do manually in 10 steps, HawkFi automates in 1 step for you. The whole withdrawing and then finding the range, redepositing and whatnot. That series of transaction takes 30 to 60 seconds, but it triggers in real time. And that is something we will optimize going forward. And next, since we deposited in a narrow range, we also want to rebalance in a narrow range too. So let's say we want it to be symmetric, asymmetric. What was it just now? Was it +4, -4?
Or was it 8?
Yeah, let's do that.
I don't remember.
Yeah, some around there. And then you could set the rebalance, liquidity shape as well. And then you save and close, and then you're done. That's pretty much it. That is the most basic version of HawkFi high frequency liquidity. There's a more advanced version of it as well, which is called ping pong, which is a quant, like actually a classic quant strategy used by market makers. You guys probably have seen this in in centralized exchanges before with the bid-ask spread,
Right.
you know, the V-shaped thing, and in the centralized exchange charts. So you could implement a similar strategy over there, and you earn fees. The goal is to profit from two different things: from fee generation, but also from actual trading, because you're kind of like buying low and selling high. Yeah. So this is a bit more advanced.
That sounds like it's up
maybe I
my
could show
alley
it
here.
to
I
you
like this
guys
one.
real quick. Yeah. So it's right over here. Auto rebalance. Where is it? So just now I set it to, you know, 4 bins symmetric, and this is basic, right? I could switch to just tab advanced ping pong. So I could do it like this, like, okay, I want it minus 4 bins and plus 4 bins, and maybe I want a spread. And so it's kind of like there's a 3 bin spread in the middle where you're not LPing and you're kind of intentionally out of range, and then you're at minus 4 bins and plus 4 bins, and that's only that's where you are your printing fees from your DLMM liquidity. And so the question is, why would you ever want to do a spread? Why would you purposely, you know, have some empty bins that are not generating fees? And the purpose of that is to buy lower and sell higher. You're kind of like trying to make the bottom bin swap from, let's say, Sol to Fartcoin at a lower price, and then the upper bins swap from Fartcoin to Sol at a higher price. Yeah, I'm not sure how else to simplify the description of this. I think the best way is just to try it out. Although, again, going straight to the point, although I've been talking a lot about, you know, very tight concentrated fee generation, wider range ping pong has been alpha from what I've seen with a lot of liquidity providers. For that exact reason, you're earning fees that are a bit more diluted because it's not super tight, but you're earning profits from buying low, selling high, buying low, selling high.
You can actually let that run like for much longer.
Yeah, that's a keyword, much longer. We've seen more sustainable PNLs for Sol USDC or even Fartcoin Sol with wider range ping pong. And actually, that's exactly this over here. Sorry, where was it? That's exactly what happened with this one. Sorry, let me zoom in. Sorry, am I on the right? Yeah. Sorry, there you go. There's a better way to see it. That's exactly what happened here. This was, I'd like to say I knew exactly what I was doing, but the honest answer was no. This was on another DLMM workshop, and I did a live demo and said, okay, let's try ping pong. Let's try 939. So minus 9 bins, 3 bin spread, and plus 9 bins for no reason. And it printed like this. And it did pretty well because it was earning fees, but because Fartcoin was fluctuating quite a bit, it kept buying low, selling high, and buying low, selling high. And let's review the automations over here. It was auto-claiming the fees generated to Sol. So I was locking in profits. And then I was maximizing yield by avoiding DEX fees from swap rebalances, because I picked no swap rebalance. I was doing instant rebalances, I was doing ping pong, and then, oh, that's the other thing I forgot to mention. If you do ping pong, that is when you do the bid-ask liquidity shape, because you want to skew to, what is it? Buy lower and sell higher. So let's do that over here. Set it to ping pong, and then we want to do it bid-ask. And there you go. Hopefully this prints in a day or two. And this is what it'll look like. Yeah. All right, that was quite a lot to cover. Any questions or anything you guys want to poke at?
Jules, I'll let you go ahead.
What's that?
I said I'll let you start.
I mean, I don't think I actually have any questions. I'm trying to think of some questions for anyone watching, beginner wise here. So, here's a good question. So, this is not going to be a technical one by any means, but that's the point. So, what's the alpha on trying to find the hot pools besides just saying, here's what's trending? What is someone new? How would you explain that to someone new that wants to investigate that, we'll say?
Definitely. I'd say I'm overly stereotyping here, but I feel like there are two types of LPers. There are those that want stable passive yield from blue chips, and there are those who are super degen. Okay. Let's talk about the super degen one first. So actually, I like to go to Jupiter Pro. Okay, I'd love to shill our own protocol and tell you could use this screener, but frankly, this is only daily. It's not intraday yet. So for the super degen guys,
and if anyone did miss that earlier, he did say it will be. You're working on going intraday on the trending pools.
Yeah. So that's our HawkFi. But then currently, Jupiter Pro is really good, or my go-to at least, because you could see what pools are cooking. And more importantly, okay, Alpha Scan is a bit too degen. Let's see, top traded. Let's go back to, let's say, Fartcoin. I really like this line chart over here, if you guys can see. So I could look at the volume trend and whether it's like a net buy or net sell in the past 24 hours, 6 hours, 1 hour, or 5 minutes. So when I'm doing high frequency liquidity for something like Fartcoin, or even like a new big launch like the Yeezy token, I'm constantly switching between the HawkFi tab and Jup Pro to look at, this volume going up, and is it mostly buys or mostly sells in the 5-minute time range or in the 1 hour time range. Oh shit, it's dropping, price is going down, volume is going down, most people are selling. Okay, I'm out of here, it's time to exit. Or the other way around, maybe everything is trending up or reversing, and that's a good time to enter. So I really like this from Jup Pro. Yeah,
that's interesting. I like that because that's for high frequency trading. Any kind of like plays like that, I like, because they remind me a lot of like options when you would be trading, stocks and options, because it's just high frequency. You can look at the numbers, the momentum, the volume, buys and sells, and you can kind of help dictate where you're going to go with that play. So seeing this is very interesting because, like you said, it's super degen, but at the same time, you can mitigate your risk. You can watch the numbers, and you can, the same way you trade, essentially. You can use these things as indicators.
Yeah, and you can manage your risk too. You could set stop losses.
Dude, that's even better. Even better.
Yeah. I'd also like to add, again, like referring to the two buckets of people, the super degen ones. For those who are looking for more stable passive yield, and actually we're getting a lot of traction on this side too, surprisingly, because stable passive yield, maybe you'll be going to Sol USDC or Wrapped ETH or ZBTC or JLP or the LSTs. And historically, those pools are so big, so high volume, but so diluted. It's like you don't care about 0.1% per day. But after concentrating it or doing high frequency liquidity, then it becomes 3% per day, and that's attractive. And so I don't think it's about like discovering what's the next trending pool or whatever. People usually go in knowing which one they want to earn yield on. Is it ZBTC? Is it Sol? Is it LSTs?
That's a good point.
yeah.
I try to remind people when you're investing, if you stuck to one stock, one index, one play, and just start understanding that play, you'll find, it'll come to you and you can find your entries and exits. And I think that's a good idea as well when you look at it that way. Stick to one game plan and maximize the potential of it. And, I think that's solid advice, or at least alpha. But all right. So this is awesome. We got a demo. We got a little bit of a understanding of LP and what liquidity is. A little intro for high frequency, liquidity providing, and taking advantage of the opportunities there. What were you going to say, Jules?
Oh, I was just going to say, basically what you were going to say, and then I was going to add. So what? I was going to ask Brad, what's next for HawkFi?
Oh yeah. So intraday is one. Another is token 2022. That has been very annoying. We've been trying to ship that ASAP, but there has been constant delays. So we need to be able to support token 2022 for the launch coins, the ICM tokens, the Believe ecosystem tokens, and then even for Pump. The Pump token is not a regular SPL token; it's token 2022. So users can't LP or automate LP strategies for Pump token on HawkFi yet. So that's.
Are you talking about
priority.
the token standard? Like,
yeah.
Okay.
Yeah.
I didn't know that there was that issue. That's interesting. I want to look more into that.
I wasn't aware on that one, and I hadn't. That's actually a good topic that I hadn't even thought about. Like, all the variety of different token standards. We're clearly only talking about one currently. I'm assuming you're saying, right, Brad?
Well, you have token 20, or you have the token 2022 extension and standard that grew onto that opened up all the hooks and the different opportunities that are available with them. There's so much power on token 2022 that people are very underestimating what Solana can do.
Super agree with that, but also share with you the other side of the story. Users love it, both retail and institutions love it, but devs hate it because it is such a pain in the ass to integrate. Behind the scenes, every dev from every protocol is like, "Oh my god, why did they have to?"
I've heard that in conversations.
But yeah, it's just something we have to deal with.
It's definitely something we've heard in conversations because it's like when we had 2021, 2022 came out. And the original token standard, everybody loved it because it was simple, practical, and you could easily build on it. And once you just you took all these branches and you said, let's expand, let's open up this, let's put this, all of these steps and characteristics to a token, that changed the game. But super exciting stuff. I love that conversation. But anyway, that's just my nerdiness where I dove deep into this. I love the SPL, all of that kind of stuff.
No, one more nerdy point is that I do think there is some drawback to the token extensions because the fact that it's so inconvenient to integrate slows down the adoption as well. So it's like if you're launching a regular SPL token standard, it's like, okay, cool, all the 20 DeFi protocols
they can integrate with it right
support
off the
you
gate
already. But if you're using so there's a bit of that friction over there. Sorry, one last thing about what's next for HawkFi is also the analytics. So our analytics is buggy sometimes. It could be slow, and that's something we want to double down on upgrading. So we've been very focused on the automations, making sure it's battle tested because that's what matters the most, right? For high frequency liquidity, you want it to be reliable, you want it to trigger very fast. So that one's already top notch. Next is improving the analytics for HawkFi. So those three, intraday screener for HawkFi, token extensions, and faster analytics. That's our top focus for the next.
Awesome. Are you guys have any, or do you have any interest getting a DApp set up and put onto the Seeker phone?
Honestly, haven't thought about. No, we thought about that, but not something to prioritize yet because I feel like there's other burning
for sure
priorities right
curious.
now, like token extensions.
Trust me, I'm with you on that. Just because it is secret season, I want to throw it out there and see where you guys are in relative. I mean, if you get a wallet, you can get in, you get signed in with your wallet, so you guys will be straight. But awesome stuff, man. I think that there's a lot to take from this this stream. There's a lot that I personally have learned regarding this and touched up a little bit more. Excited to dive into the documents, and I have a full page of notes right here to add to that. So I'll be chewing through this. What about you, Jules? How do you think that was?
I loved it. I mean, I think it was important to kind of go through. And granted, we could have probably talked for another 4 hours on this topic.
Yeah, seriously.
But it's a tough topic that I don't know that. I mean, you do have some very hardcore LPers out there that this is all they do. It's just a form of trading, obviously, but there's still a lot of beginners that I feel like sometimes might get a little turned off by it by not getting a really good grasp of things. So
right,
I think that's a good start for anyone watching that maybe has been a little bit scared to get into some of this. Learn a few things. Obviously, now where to go to even learn a little bit more. So I think it's a good start for those people.
Couldn't agree more. Brad, you got anything else you wanted to share with us today before we wrap this thing up?
Nope, covered everything. Oops, sorry, let me stop the screen share. Yes, covered everything. All good,
man. Like I said, I got a page full of notes here. I got some other stuff we're going to go through as far as documents and see if we can get any kind of this stream micro content and broken down any pieces that we could share. We'll definitely tag you in them and get them across. But this has been fun, man. This is an area I haven't looked at just because it's not, it's not front and center. It's not what people are paying attention to because it can seem a little daunting. You made it really simple for us to get involved and know where to start. There's tutorials, there's documents. It's all pretty simple stuff right there. So I'm going to dive in and share what I can. But I appreciate your time, you coming out, being on the other side of the world and making this happen. We appreciate that.
Likewise, man. It's my pleasure. Appreciate it.
What about you, Jules? You got anything you wanted to take us out with?
One thing we're not going to get into charts being this time of the day. Everybody's looking at Sol. Everybody's looking at whatever. I would just say chart of the day. If anybody wants to really be paying attention, chart of the last 2 days, look up. And this is, of course, if you have a trading view account, others dominance. We are breaking out. That is the chart everybody cares about anyway. So obviously Others D, that means basically you're instead of like BTC dominance or Sol dominance, whatever. I got others D pulled up as a crypto total market cap excluding top 10, and that is the dominance on it. So right now we have been. I mean, I could share it really fast if you want.
Yeah. Pull it up.
Hang on a second here.
Because I saw somebody posting about this morning.
Oh, really?
Yeah.
I don't know if okay. Yep. So obviously we're in this really tight range and boom, breaking out. We're going above the 200 EMA. And we will see where this goes from here. But bullish for alts at the moment anyway.
Yeah, well, that was the post. It was like, it's officially altcoin season. Like it was like 28 minutes after I think I first talked to you this morning. I was like, let's pay attention to the markets this morning and see what happens. And there's that confirmation that I was looking for. So
boom.
There we go. Things are going to get cookie. A little Sendy season. All right, Brad, we will bring you back in a few weeks, months, something like that. See how things are going. See what's new. See what we can catch up on and brush up on anything that we missed here. But if you ever want to get together, do any spaces or anything like that, I'd be more than happy to host and make that happen for you. That's what it's all about over here at Solana, is networking and bringing communities together and teaching a little bit about what we know and growing together. But again, man, thanks so much for your time. And Jules, if you got nothing else, we're going to wrap this up. You guys take care. Have a rest of your day. And that's it.
All right. Have a good one, guys.
Take care.